Well, it looks like markets are struggling to find buyers. So will we see the Santa rally begin, or are we in for a lump of coal this year? So hi there everyone, welcome to the Traders Circle weekly market update. It is Tuesday the 16th of December 2025, and before I start, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. So we had the Federal Reserve interest rate cut last week. They cut interest rates, and that was pretty much guaranteed by the market. The market fully expected the rate cut. After the rate cut, the US market did push back to the all-time high, but they weren't able to break into fresh all-time highs. And, basically, this is something that I warned about in prior weeks, is once this rate cut happens, it's good that it happened, and if it didn't happen, the market would have fallen off. But after the rate cuts happened, what are they then looking forward to? Some in the market think there's going to be more rate cuts. Some in the market think that that's about it. Regardless, though, it does look like the rate cuts are starting to dry up, maybe coming to an end. So after the rate cut happened, great that it happened, but what is there to look forward to? What's the next thing? The market is a forward-looking beast, and it's great having a carrot dangling out in front of it, but once you've eaten that carrot, it then needs another carrot to sort of keep going. And I think that was the sort of, for me at least, the story coming out of the rate cut is, yes, good that it's happened, but now that it's not certain if there's going to be another carrot, another rate cut, it's a little uncertain if markets are going to continue higher. So US markets pushed to, or they were roughly at the all-time high resistance. They tested the all-time high resistance, but they weren't able to go any further. Over the last couple of sessions, really they've shown an inability to push any higher, and they've closed a little bit lower and a little bit lower. And now we're sort of scratching our head, are US markets going to start to see a bit of selling, a bit of profit taking going into the end of the year? They are at the all-time high. If you're a trader or an investor, you're probably in a profit. Will you consider just taking that profit, having a nice, comfy Christmas, New Year's break, without having to worry about whether the market's going to pull back or not? What that means for the Australian market is we looked like we were going to break back higher. We looked like we were going to head to our peaks of, August, September, October. But with the US market failing to set new highs, I think a bit of doubt crept in. And so we saw, some strong movement late last week. Then we saw a bit of selling yesterday. We saw a bit of selling in today's session. And that pulled us back into the range of the sort of past month or so, even though it did look like we were going to break higher late last week. So yeah, the news probably a bit disappointing, the news of the rate cut. And that's because, the carrot's been eaten, but not necessarily replaced by another carrot. That could change though, because this week we do have a huge amount of US economic data. A lot of US economic data has been on hold. It's been paused because they had the government shutdown. Now everyone's gone back to work, but they need to start compiling that data. They need to start preparing those releases. I don't think it's going to be the most accurate set of data releases, but I don't think the market really cares. Tonight they've got retail sales and they've got jobs data, non-farm payrolls. The market's expecting, a slight tick up in unemployment, fairly flat, fairly stable retail sales, and that's probably what they want to see. They want to see slightly higher unemployment, pretty stable, maybe slightly lower retail sales, and that leaves the door open for further rate cuts. The most important data this week, though, that's going to be on Thursday night with consumer price inflation, the consumer price index. If inflation is lower than expected, if it's ticking down, that means the door is open for further rate cuts, and we might just see, fresh all-time highs. We might see that Santa rally. But, if Thursday night's inflation data shows sticky inflation, as it has done for the last sort of 12 months, really, that could mean that we're at the bottom on interest rates. God forbid inflation tick up a bit, and that might mean that we could see a rate rise next year. And obviously the market will throw a massive tantrum if that's the case. The reality is that US inflation is well above, probably about 50% above the Fed's target range, and it isn't falling. From an inflation perspective, there is no justification for further US rate cuts. And so, if that inflation number doesn't resume falling pretty soon, I imagine that we will see a bit of selling creep into markets. And, probably going to see a pretty severe drop at some point if that is the case. Keep in mind, 2022, 2023, there was an awful lot of selling as they lifted interest rates. I wouldn't rule out, a return to that sort of price action in the not too distant future, because I do think that rate rises are an eventuality. Not necessarily, early next year, possibly towards the end of next year, maybe not until 2027, but we will see rate rises in the not too distant future, in my opinion. So the question remains, are we going to see a Santa rally? Apparently it's a cyclical pattern that happens most years. We didn't really see one last year until pretty much January, but historically it certainly has happened. If it is going to happen, perhaps this week's data releases could be the trigger for it to happen. Maybe we see a slight tick up in unemployment, slightly worse retail sales, and inflation resume falling. And if that's the case, further interest rate cuts will be penciled in for early next year, and markets will probably break to fresh highs. However, like I said, it is very, very dependent on that US economic data. And for the Australian market, we're really just going to follow what the US market does here. If they break higher with the view of further rate cuts, our market will break higher as well. If they see a bit of selling because rate cuts are off the table for now, we could see a return to 8,500 or below on our chart. Let's have a look at the charts, and this is the US S&P 500. You can see they've stalled out around their all-time high, roughly 6,900 index points. You could say 6,920. It's a bit of a, much of a muchness. But yeah, they've stalled out at that level, failed to break that level last week despite the interest rate cuts. Bit of selling on Friday, bit of selling on Monday, and now we're waiting to see if they can break above that level with the data events this week, or if they're going to break back down. If the data is bad, I'd be looking for a break of roughly 67.60 here. If that happens, we're going to see a pretty big move down, probably to about 65.50, and maybe beyond that level. If we have a look at the Australian market, the XGO index, and we can see that we're still quite a way off our own all-time high. We did try to break higher last week after the Federal Reserve rate cut. I think our market assumed that the US market was going to make fresh highs. We broke beyond that resistance at roughly 86.50, and it looked like we were going to head up to the previous support level, which may act as resistance, around 87.50. However, US markets didn't break higher. They closed lower on Friday. They held their resistance, so we pulled back to the support level, 86.50, previously resistance. And then today, after they fell overnight, we pulled back into that sideways range that we held for most of November and early December. So we're back in our waiting range. We're back waiting to see what happens in the US. If they break into fresh highs, I'd suggest we're going to at least 87.50. If they break back down, though, we could be looking around 8,400 for our own market. So our market also at an indecision point, and basically waiting to see which way US markets break. I know plenty in our market have been bullish based on the fact that US markets are at all-time highs and our markets come off quite a lot. But I just want to say that our market really doesn't deserve to be in the 8,000s. It's only up here because of US strength. The strength of the companies listed in our market probably justify a significantly lower index price overall. So even though the US market is at all-time highs, if they pull off even slightly, I think our market will be willing to see a bit of selling. Hopefully that's not the case. Hopefully we see the US markets break into fresh highs, and that might mean 67.50 by Christmas. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you next week.